All right. Welcome back, folks. Another live recap review from your boy UV the Great. This is your unique trading group. And I just want to recap yesterday's video from last night and follow up on some things that we talked about. As you can see here on my screen, have a couple of things we talked about for SPY. I don't know about you, but today was a really good day today. My guidance kind of played out to the T. Not because I'm the best or the greatest, no pun intended. It's just that when you're properly prepared, you prevent poor performance. And so we're going to dive right into it. First of all, I want to start with this section here about analyzing the falling VIX and its implications for volatility. How the gamma squeeze post options expiration could fuel additional upside. Now remember, I said that this Thanksgiving could, fuel a potential rally. All right. So what we're gonna do is we're gonna head on over to the charts. And again, this is a recap from last night's video I posted around 11 o'clock that I titled Post-Thanksgiving Game Plan, SPY Insights, and Market Rally Expectations. So let's hop over to SPY. Let's see what SPY has done since that initial post. Okay, we are here on the hour time frame. All right. Last night we talked about buying pressure, right, in this W shape. And I also mentioned that I wanted to see price come from here, which where it was last night when we spoke on the video together. And I said that I wanted to see price hit here and around market open to take profit. What happened was I didn't take profit here, but the market did reach this here resistance level. Let's make this a little bigger. Keep it plain and simple. As you can see here, just like to the left, when you look left, we had a little bit of selling pressure. Here was a wall. Price fell back. Just like here, price fell back. And I also mentioned this in the video last night that we could retrace back and form a base here, the same as we did here. And that's exactly what we did. As planned, we fall back to a base and we continue to move higher. Now, to make this a little bigger, what I have here on my screen is a volume profile. This is a P-shape volume profile. I speak about this a lot. There are letters, there are shapes that you can notice in the market that have high probability. It's not about being right or wrong. It's just about screen time, being able to see these setups and executing flawlessly like a professional. All right. And not only is this the P volume profile shape, but those who are familiar with this type of pattern here, this is what they call a bull flag. You have your pole and your flag. This is your consolidation period here. And what happens is you have a breakout from here. And this next leg you see me drawing is going to mimic this first pole right here. This is called a bull flag measured move. All right. Okay. So let's take this off of the screen. All right. As a matter of fact, we're going to keep it on the screen. Now, let's get back into some of the data and the guidance I gave yesterday since we see this setup. All right, now we're going to start with the daily. All right, and I have some notes here. That we could use to further the video, right, for efficiency. 1 second. As I navigate the screen. All right, what we're going to do is we're going to lock these. We're going to lock these messages so that when we get ready to take off some of the important drawings that I want to clear up, we still have some of our best ones. All right. Okay. So last night guidance was for us to watch the numbers of 601.77, $600.85. Now, we seem to breach these numbers today, and we popped over here. And as soon as we popped above this level right here, we've seen some continuation. Now this was based on the weekly and the daily. When you see the weekly time frame, you can see that it's also breached and broke this previous high here, which was $617. All right. Now, for those that know, I put out some specific guidance to be able to check the 4 hour and the 1 hour for a 601.77. Now that actually happened. 601.77 is about right here. Okay, so let's put a horizontal line to represent 601.77. Now this line here actually, and this number was from last night's guidance about the post-Thanksgiving rally. I mentioned that in order for us to continue a upside momentum or upside continuation, that we had to pass 601.77 Now why is that? Because this was the high on the 1 hour and the 4 hour, right? And earlier I told you about a bull flag measured move. This is also it itself. So this right here is also a bull flag measured move that played out today, similar to the one we see on a high time frame. Remember that some of these time frames, they mimic each other, small and big. Only difference is the smaller time frames take longer. The smaller time frames take a shorter time to play out. All right, as well as the bigger time frames would take more time to play out. So getting back to this move here, once I seen that 601.77 was breached, that was a trigger for calls. And as you can see here, there was buying pressure. We broke out of this resistance level. We broke out and we came back to retest that line, and we continue all the way up into 603. Now my first target was 606, if you don't remember. However, I did mention last night that if we breach 601.77, that there was no guarantee that tomorrow, which will be today, Friday, that we will bump to my first target, which was 606. This was my first target. All right. And so that played out today to a T. Pretty much, it was a short day. I mentioned that it was going to be a short day, that the market closed at 1 o'clock. That's what happened. And so we didn't get any of that follow through past 603. I secured some profits on my call swings. And once I seen that the momentum was staying above my 601.77, and this candle here created a higher low from this one, the retest zone, I bought calls at the end of the day. All right, so I bought 605 calls, and I bought them all the way out in February of next year. All right, just to make that a note. And that's what you have here. Continuation, bullish momentum, post-Thanksgiving rally, and we have buying pressure. So I want to move over to the option chain quickly, and I want to talk to you guys about gamma squeezes, okay? This here is one of my personal accounts with Thinkorswim. It's a margin account. It's a margin account now. I started with a couple $100 a couple of weeks ago. Traded Tesla and SPY. It was real volatile, and bumped this one up to 2,000. So now this is a margin account that I turned into a swing account. All right. Now this next segment is called the more the gamma, the more the squeeze. The more the gamma, the more the bid. Now if you see here on this option chain, here, right here where my cursor is, this is called the gamma. All right. And gamma deals with the velocity of how fast money moves. And as you can see out of this lineup here, the highest would be the 615 strike. I chose the 605 as a 113 gamma. It's lesser than the higher one, but it's okay. It doesn't invalidate it not being in play or working. I just want you to know that this is a measurement that I use, because the more the gamma, the more people are going to be hitting the bid size. You understand? All right, now bear with me here. I want to explain to you guys what this really means. All right, now this is something I discovered after years of trading, but the more the gamma you have, the more bid size you have. And I want you to navigate my screen as ChatGPT talks about this. Okay? Understanding gamma and options. Gamma is a measure of how much an options delta changes with respect to a dollar change in the underlying stock price. A high gamma means the delta of the option adjusts more rapidly as the stock price moves, which can lead to more active hedging by market makers. All right, and that just means this title here, this statement here, which can lead to more active hedging by market makers if the stock price moves rapidly, because the market makers have to stand by ready to facilitate trades for buyers and sellers. And so whenever there's more buying pressure, they have to hedge the other positions in order to pay us. This is how a casino, how algorithms work. All right. Markets making market maker hedging in the bid size. When market makers sell options, they hedge their positions by buying or selling the underlying asset to offset risk. If gamma is high and the stock price moves, market makers need to adjust their hedges aggressively by buying the stock when prices rise, adding bid size, or selling when price drops. The bullish pressure can be explained by market makers buying the stock to hedge their positions. This creates upward pressure on the stock price, especially in a low liquidity environment or when there is significant option activity at key strike prices. All right, I specialize in this type of trade. You might not know it, but if you've been following me for a while in the Discord, this is something that I do not talk about a lot. You don't need it in order to trade and be successful or rather consistent, but it's just an edge knowing this thing whenever you are picking your strikes or picking your trades. Knowing this and understanding this gives you an edge over everyone else that doesn't know. All right. This phenomenon is particularly noticeable during a gamma squeeze, where large option positions and high gamma combine to amplify price movements. All right. The combination of high gamma and increased bid size indicates bullish pressure as market makers buy activity can push price higher. This is especially relevant around expiration dates or even heavily traded stocks with concentrated option positions. All right. Now let's go back to the chart. Now, if you see this move, you see a W. You see a W shape, and you also see a break of that. All right, these have high probability setups of working out. This is a high probability setup, and it has a high rate of working out. I talk about this in my Discord, the unique trading group. You can find that link below. But here's a break here, and we have upward pressure. This right here would be the moment where gamma meets delta and the hedges meet the positions they got to cover. Right here at that moment. Looking at a chart now, I know this by not even doing all the reading. So you can seamlessly pick these things out, knowing it and spotting. It makes sense because this is the breakout moment. All right. And as you can see, we have some buying pressure here for the market, pre-market, after market. So I'm looking forward to next week, guys. To be quite honest with you, a lot of things haven't really changed as far as the guidance that I gave. I just wanted to do a quick recap of what I think is going to happen and what I said I thought was going to happen. And we had a little bit of continuation today. Before we go, I want to introduce you quickly to a stock site that I use called Bar Chart. We're going to type in SPY, and I want to show you the gammas on SPY. I want to show you the numbers, right? You don't have to guess. You don't have to gamble. You can actually go and find the pressure that we have on the gamma, on the certain strikes we have. You want to see how high the gamma is and which one stands out significantly out of the rest. All right, as you can see here, we have gamma exposure at 603. 603. All right, it's a lot of exposure here. 600, there's a lot of 600s bought. 605, which is one of my targets. This is high probability, a lot of gamma. All right, so I see this, and I see that 603 has a lot of buying pressure, and I'm looking for this to rise as price gets towards it. I do plan on taking some profit once spot hits 606. I'm going to be shaving off, but as you can see here, this is another base forming. 603 is the top. And so that's what we are waiting for next week. We need a 603 break. And I would protect my money below here. If you're in trades already, long swings, I wouldn't be too worried. This is the next zone here, around 599. So if you are swinging long, 599 will be a place to add, not to panic. If you're day trading and swing trading for a short period of time, for maybe a day or so, you want to look here. And we are on, I think the daily time or the hour time frame. You want to just watch for 602.23. This is a demand zone, a demand level here, place of support, a floor, and price needs to stay above here inside of this range. Remember that anytime you have a strong move up into a range, they act like magnets and they go back and forth, back and forth. Your job is to wait for it to break one of the sides. If it breaks below, that's puts, right? Right? But if it breaks below, that's puts. But what if it breaks above the range? These are calls. It's really not that hard. All right, guys. I hope you enjoyed the video. Until the next time, remember to always define your entries, your exits, and your risk before you take every trade. And you'll be just fine. All right? You guys have a blessed day. Hope the video was effective. Make sure you hit the like and subscribe and share this video if you found it effective. Have a wonderful day. Peace.